Welcome back. Now we turn our attention to earnings. We're considering cement companies. We have Lafarge, we have Boa, and also have Dangote. We're looking at the Q3 earnings. So for Lafarge in 2022, Q3, 269.852 billion naira. In 2021, 219.197 billion naira. The percentage change there being 23.11. For Boa Cement, 262.598 billion naira in 2022. And in 2021, 186.905 billion naira. The percentage change, 40.50. And now to Dangote Cement, 1.177 trillion naira in 2022. And in 2021, 1.022 trillion naira. The percentage change there being 15.17. Now, if you look at this particular number, for Lafarge, it grew its revenue by 23.11%, Boa by 40.50%, and we have Dangote by 15.17. We can see that if we're going by the percentage change, we see that Boa is leading the pack in revenue. So this is the point where I would like Mr. Kofi to come in. I'd like you to talk to us about this performance.
Well, as this performance, it shows you that aggressiveness expansion done by the Boa Cement. Boa, they keep on expanding, and because they are expanding tremendously, their turnover is increasing tremendously. And as we are all aware, the demand for the cement in the market is still not met up by the production sector. So the much you produce, the much the market is ready to take it from this, and that would give that Boa edge. But the beauty of it, both the three cement industry are in the double-digit growth. It shows you that there is more room to grow, and we expect more cement industry to open. I know of that of Chinese. They are building one in Kogi, and Alaji Mangal, Max Air, is also building one in Kogi. It all shows you that the demand for the cement for now is infinite, in view of the fact that the infrastructure decay in the country is on serious demand of cement, and there is no alternative to it. So the cement industry is the focus, and today the market is benefiting from the growth in the cement industry.
All right. I think Alvis wants to say something. I can see him.
No, actually, like you have said it, as a result of infrastructure gap in Nigeria and also housing gap in Nigeria, we're about to see all this demand.
Let's look at Dangote. The gap is a lot, trillions. I mean, talk to us about that.
I'm coming to that.
Okay.
You know, they all have their space.
Yes.
In any market, and you have your your own market share. When it comes to the industry where they are playing, because they are all in the same industry, because of what I said earlier, that infrastructure gap and also housing deficit we are seeing in Nigeria. Infrastructure is what we need, and into that infrastructure you need cement. And also these three companies, as in the past 2 months or better than a month now, increase the price of their product, and that is also a plus for them. Like you just mentioned, for you to see the trillions in Dangote Cement, it's a lot of this company is operating even outside Nigeria, even about almost 22 or 23 countries, in Africa where they have operation. But if you go back and look at the bottom line of this company, most of them, the operation in Nigeria, if you look at it, didn't contribute more to that of Dangote bottom line, but those outside Nigeria contribute more. That means you can see how it's a good idea when you expand your market. You can see always substitute where it can also support when there is a shortfall in some market. For me, it's a good one for Dangote, but don't forget that this company is also large. If you look at what Dangote is chunking out, or what Boa is chunking out, or what is telling, like that Dangote is ahead of them. But as we speak now, if you go down and look at the bottom line, which you are going to see that it's a different because of cost issue also that associated with this kind of production also will reflect on your bottom line at the end of the day.
All right. Well, moving on, let's look at the profit after tax now. So for the profit after tax, the same thing. We'll look at Lafarge, Boa, and Dangote. For Lafarge, 44.899 billion naira in 2022, and in 2021, 40.394 billion naira. The percentage change there being 11.15. Boa Cement, 74.01 billion naira. In 2021, 65.906 billion naira. The percentage change there, 12.30. For Dangote Cement, 213.101 billion naira. And in 2021, 278.250 billion naira. The percentage change there is in the negative, of course, minus 23.41. Vincent, talk to us about this.
Is that we like we initially talked about the turnover, we have seen an increase in turnover, which is quite impressive, and like it's expected, like Alaji mentioned and Sanders mentioned, we will continue to see this increase because there's a lot of space for growth in the industry. But the profit after tax is not as the term increase in turnover. You can attribute it to some of the one factor that increased operating costs, especially for Dangote Cement. If you look at despite the increase in turnover, if you look at the operating costs for the period, you see that as a result of increase in the cost of operation, especially for diesel. You know that a lot of movement, the truck moving the goods from one place to another, they move on diesel. I think it's part of and we have seen an increase in the cost of diesel. So I think that's part of what is bringing down their profit. And the most affected, definitely, because definitely is the biggest in the market, is Dangote Cement. The other two companies are also affected because when you look at the PAT is lower, the growth in PAT is lower compared to the turnover. And as BOA continue to grow, I think you will continue to see the impact with respect to to its PAT, because the cost of operation continue to increase, especially for this year. And so we expect when they are able to, I think as time goes on, they're able to look at alternative way of moving their goods and see how they can reduce costs so that they can increase their bottom line.
All right, thank you. Mr. Kurfi, let's have your thought.
Well, I carefully analyzed the three of them. And the question I asked, in turnover, Lafarge now has a marginal increase over and above of BOA. But why the BOA declare a profit almost 2 times of what Lafarge declare? And if BOA achieve what the Dangote men achieve, their profitability will not be the same. Because when you look at the turnover, you look at the profit margin, you will begin to wonder what is happening in this industry. It's as if BOA is holding them all along, because it shows clearly that it has a better margin, a better profitability, even though they have large shares capital. But in terms of profit margin, I think BOA is showing something that the other have to be questioning themselves. Why in the same industry, I have 2 times of your profit margin than what you are declaring? And this is the issue. But anyway, I know time will tell, and the regulator and everybody is watching into it. Because you cannot be operating in the same environment, having higher turnover than me, and I declaring 2 times of your profit. The question, are you really declaring everything?
All right. Okay. Oh, please go ahead. I thought you were done. Go ahead, please.
Yes, but the other issue that interests me is that the Lafarge, which initiated the interim dividend, decided to follow the others. This year decided not to declare interim dividend, so they want to wait and pay their final dividend as the other one are doing. And this is one of the concepts that the market have to respond, because if we have respond positively to the Lafarge interim dividend they declared last year, it will encourage more cement industry to declare interim dividend, rather than now stop declaring interim dividend and waiting for the final.
All right. I think, okay. I think he's done. Okay, Ambrose, let's have your take. I want you to talk. I think at some point it felt like he didn't want to specifically say what exactly he had in mind. Do you mind helping him, give voice to that?
No, I like you understand the business industry, because you know that, what is it called? Lafarge is down here close to us because of his market. BOA farther in North Sokoto and all those stuff. Dangote around Ogun State and others, Kogi. I'm not going that way, but I want to go the way of price. I tell you that price speaks volume when it comes to equity investment. The 3 companies, I'll tell you, they are performing well, their numbers are good. But you as an investor are looking at, in all this company, I'm there to make profit. Who with their numbers and the expected end of the year, who will give me a good dividend yield at the end of the day? Yes, for capital acquisition, we have seen that because of corporate action, we expect from Dangote as a result of 10% buyback proposed in this month of December. The price have moved from as low as 220 to almost 263 now to speak. While BOA have rallied from almost 64 to almost 77 now. But look at what is happening in Lafarge. They are in the same sector. Lafarge has good top line. You can see that the bottom line is not in a decline, still green. That's 11 points for me. But in this price now, look at what they paid last year. let's start from there, because dividend yield is just to guide you. It's not more than what they paid last year. If they grow their dividend payout, it becomes better for investor. But the price you are buying is very important. Well, Dangote cement is around 263, while BUA is around 77 naira to speak now. And if you look at the resistance level for BUA, it has been around 80 naira. While that of Dangote cement has been around what? Around 300 naira. For Lafarge is has touched 31 naira, has been the top line, or the most resistant price now. Now it's selling around 22 naira, 23 naira. You can see as an investor, the yield you are going to a capital appreciation, where will you go? Let's say that I look at here, this company, they are in the same sector, the same factor is going for them, apart from your expansion, your cost and everything. For me as an investor, I look at where will I put my money for. I tell you that price is very important, and what will give you what will come to you. For me, I see as Lafarge has been most attractive now in this market at this point. Like Alhaji said, if they decide not to pay the entry dividend because they paid last year, market did respond positive to it, they put it back, and they paid 2 naira last year. Now already as at Q3, as we're going to see, the ends almost around the 3 naira, around 2 naira 79, could be 2 naira 97, if I'm just right. That is that at the end of the day, if they can make 350 or 4 naira, they can't pay you the same 2 naira again. And the price is almost around 22, 21. And if you are buying for dividend yield, it's a store that should go. But for Dangote Small, we're seeing a decline in the bottom line. We don't know how the second quarter will go. We are saying costs are attributed to that decline. If it continue, we don't be able to pay the 20 that they paid last year. Investors should look at, but if you are looking for capital appreciation from 240, 263 to 300, you know what is there almost 38 naira. But from 22 naira to 31 naira, almost 9 naira. And for BUA, from 17 naira to 80 naira. If you look at it as investor, this should guide you what to be. The companies are very good, their numbers are okay, but we are afterward return at the end of the day.
All right. Very quickly, let's look at the earnings per share. For Lafarge, 2 naira 79 kobo. For BUA Cement, 2 naira 19 kobo, and for Dangote, 12 naira 51 kobo. I think that to a very large extent you've almost talked about that. But very quickly, Vincent, let's have your take on this.
Yeah, the earnings per share shows that from the three companies, I think Lafarge is doing better than others. And you can attribute the fact that when you look at the outstanding shares for BUA, it's quite huge compared to Lafarge. And Lafarge used to have issues, and they were able to turn that around the corner from last year. And if you look at the earnings per share, it makes them better off and make them desirable. Despite the fact that, like Alhaji talked about, the fact that BUA Cement was doing better in terms of bottom line, but for the earnings per share, shows that Lafarge is doing better, and it will, based on earnings, if they are able to maintain these earnings and they are in better position to pay the dividend, their dividend yield makes them better off and preferable for an average investor.
All right, so quickly we'll go to price to earnings ratio, starting again with Lafarge Africa. What we have, 7.98. For BUA, 32.03, and for Dangote, 17.63. Mr. Kofi, let's have your thought on this.
Yes.
Do go ahead, please.
Good.
We want to have your thought.
Yes.
Alhaji, what do you think about this? Alhaji, can you hear me? But I guess we lost connection with Mr. Kurfi. I think that will come back to you then.
No, we have said earlier that when you look at the P ratio, most times it's just for you to don't have a simple valuation. If you go down, look at doing whether you are using your discount model to analyze, yes, you can see that they all have value. For quick one, say P tell you at the time you take to recoup your investment, if earnings remain that means if any improve, it becomes shorter. But looking at what we are saying now, I think Lafarge also fall as number one, because it is below 12 times of what is and it's for me it's a good one for them. Then for BUA it's not bad one, for that to Dangote, because different model for valuation, but for quick understanding of what to do, look at say Dangote, Lafarge is more attractive because it has a shorter period for it to grow, and if earnings improve, that is the direction, it becomes more shorter. For me, I would say that yes, Lafarge is still leading there. For a good investor that I want to take care. But for those that look at capital appreciation, I show you the scenario where Dangote Cement is going if they want to push again. But last year when they started their 10% buyback, it thought as high as 300. If that trend is maintained, it's a good one. For BUA, tell you that 80 naira was the way it touched and it came down from there. Now you can see Lafarge have told them almost 31 naira. I've said it earlier. Now around the 22, you can see the margin there for investors, and the yield also is a plus for them. That's why I said the market for now, I see that volume is small to show that those sophisticated investors, I call them smart money, are not the money in the market yet. When they start coming, you see, like I said, this December, the early January, I think we'll see how the market will perform. That's why the profit taking that will come in between. These are the things that will drive the market. This low valuation in Lafarge, in Boa, and also in Dangote, another company like in the banking sector will drive the market because we are seeing value in this market.
All right. Talking about the smart money, when should we expect them?
No, well, you know, they are still waiting. You know, this man, you can't decide for them. They know what they are waiting.
All right, quickly, let's look at the book value per share. For book value per share, Lafarge 25 naira 29 kobo. For Boa 11 naira 34 kobo, and for Dangote 49 naira 19 kobo. Now this is the book value per share, but very quickly let's look at the share price. Lafarge is 22 naira 5 kobo, Boa is 77 naira, while Dangote is 262 naira 30 kobo. Now if you can hear me now, Mr. Kofi, can you hear me?
Yes, I can hear you.
All right, so what is the implication of this? Talk to us.
Well, let me tell you that in capital market, book value is less important.
Yes, sir.
Except those companies that they are going to be liquidated.
Yeah.
So we don't pay attention much to the book value, but it shows you the huge investment made by each company to warrant the book value. But the reality is not what matters to us, because book value is all.
All right, I guess we lost connection again. Mr. Vincent, if you can hear me, I'd like you to take it up from there. Mr. Vincent, can you hear me? Okay, so I think Alaji already talked about the fact that for him, it doesn't necessarily hold water, except for companies that...
For the investment.
Okay.
I think I heard Mr. Kofi. Please, I'd like you to say that again. I could barely hear what you said.
Yes, what I said that as far as the book value is less important in our technical analysis,
yes,
because it's mainly for those companies that are going to be liquidated. So what matters is the turnover, the profit margin, the dividend yield, the earning per share. We pay less attention to book value.
All right. Very quickly to profit margin now before we wrap up. Lafarge Africa 16.64%, Boa Cement 28.19%, Dangote Cement 18.10%. Mr. Vincent, if you can hear me, let's have a thought on this.
Yeah, the profit margin, it shows that Boa Cement have a higher profit margin. One thing about fundamental analysis is the fact that you have to look at it from various areas.
Exactly.
And this tells you a lot, because it's from the profit margin analysis that will determine the level of profit. That's why you can see it shows that Boa Cement has a higher profit margin, and it also showed in its turnover and its PAT. I think it makes it desirable for others. And looking at it, though Lafarge has a higher book value, you can see that it came third in terms of the profit margin, and it speaks a lot about the ability of them to book profit with respect to their operation. So I think Boa Cement is ahead in terms of, from the figure, is ahead in terms of profit margin.
Okay, Ambrose, let me have your thoughts.
Yeah.
Technical analyst.
No, not technically. Like my colleague just said, both Alaja and Mr. V said, I agree with them. But what matters is that the three companies' profit margin are very, very okay. As far as they are above 15 and 10%, good. It tells you that despite the high cost associated with their operation, they can still give all this profit margin. It tells that they are all profitable companies to look their way. For me, it's a good one. No, yes, you mentioned that Boa profit margin is, we agree, above 15, and also for me, the all profit margin that came from the three companies, I intend they are okay, so that this sector are profitable for investors because of the huge potential in that industry. I believe that investors will catch on it at this time, because I believe that the coming government, whoever that comes, will continue to do our reform. These are the sectors that will drive the infrastructure set up the economy. That means there is still potential for this company to do well. But if we will also to control the cost and are able to bring down the cost of diesel and all those things, it will be a plus for this sector. But there is good potential for them. We can see where they are going, and the result that they are talking out. For me, it's a good one. Like my two colleagues have said, it's a good company to watch. Their profit margin are still in order, by international standard, that thing, but everywhere, that means these companies are profitable. I would say that.
All right. Well, in closing, let's have a final thought.
Yeah, if you look at the company's return on equity for 3 of them, they're also okay, because this is our third quarter result we are seeing. You can see that Dangote Cement is leading in terms of return on equity. It shows that the kind of payment they are doing and what investors is getting from them. But if you look at generally, the 3 companies in that sector are doing well. I believe that investors are looking for value. You should also look at this and also let price guide you, and price and performance, because they are doing well. What you get at the end of the day, there are some things that you need for your defensive, your portfolio. There are some that you need for capital appreciation. There are some that you need for dividend yield. Let this guide you as an investor.
All right, Vincent. In closing, let's have your final word.
Yeah, my final take would be the cement industry is an industry that is expected to stimulate a lot of interest, like I've been mentioned. There's a lot of opportunities for growth, and also the activities of these 3 companies in terms of their expansion means that there's still a lot of things that investors can gain from their expansion ability. So it's something that investors should take advantage of, and also invest in them as they grow. They're able to grow their investment, both in terms of capital appreciation and also in terms of earnings.
Okay. Mr. Kofi, let's have your thoughts.
Well, my thought that it is very clear profit margin is what matters to the investors.
Yes, sir.
Because in the event of eventuality, you lost. So you see that those that give you profit margin like 28%, it means that for every 1 naira, 28 kobo goes to the investors. And this is a very good margin that irrespective of the situation, you can be mitigated by that wide margin. But the one that show less margin, the question is that are they really prudent as this one is showing, because they are in the same industry? But the one that has high margin, it gives confidence to the investors and the newcomers who want to come to the cement industry that you are welcome. That is the demand, that is the margin, that is the market. So new investors are welcome into this industry, and still there is room to grow for the others. Thank you.
Thank you so much, Alhaji. Thank you for sharing your thoughts with us. You've been hearing the voice of Kasim Ogaruba Kurfi, the MD CEO, APT Securities and Mutual Funds Limited. Thank you for coming on the show.
You're welcome.
And of course, we've been speaking with Vincent Oshoma, the head Capital Market Interstate Securities Limited. Thank you for speaking with us today.
Thank you for having me.
And of course, the regular one, I'm Bruce Omodio, the Chief Research Officer, Invest Data Consulting. Thank you for always making it, an amazing time with us here.
Thanks for having me, Perpetua.
All right. Many thanks to you two for watching. My name is Perpetua Fasami Peter. Do enjoy the rest of the day and happy weekend. Bye for now.